Hi, I'm Mikey. This is Tyler. We're the founders of Innovative Start Organization, a nonprofit that teaches financial literacy. And in these videos, we discuss current or just trending financial or economic related news. Today, we're going to talk about some of the tariff and trade tensions, and then we're going to lead that into some of the AI and stock market boom that we've been seeing. So, again, as we get into these topics, obviously, as we always say in every single video that you see from us, to do your own research, form your own opinions, and yeah, come back to us and let us know what you think in the comments. But to go ahead and get started, we're going to start off with some of the tariff things. I think the interesting thing about tariffs and probably just the general, everyday consumer, everyday American, or whatever it looks like, probably doesn't understand the impact whenever tariffs are announced as far as like whether they're being raised, lower in specific countries, whatever those goods look like. Um, but I think interestingly enough, depending on what type of administration is there, what type of deals are there, how much you have as far as like imports. Obviously, the tariffs are on the imported goods versus like that. So if you, I think one good example in here that we have in the notes is that say for like a car, for an example, or anything that you like a good that's just manufactured not here in the US, right? Whether it be a part for something of a whole or whether it just be that full manufactured good. Um, Whatever it's costing that person to, or whatever it costs that person to get that good, right? Obviously, they're going to want to make a profit. If I'm buying something at a certain price, X amount of dollars, right? And the country or whatever has some type of tariff, they're going to charge me more for that. So now what I have to do is when I sell it to you or the business or whatever else, I need to recoup whatever that is that they're extra charging me because of the tariff that's been put on them, and then in order to make sure that I get my price and everything else. So whenever people talk about tariffs, they're like, oh, it's gonna, impact your grocery shelves and all that stuff. That's just kind of like the baseline example of how it gets to that. So it can be any one product as like a whole, a piece, or whatever it is. If it's coming from somewhere that's not the U.S., right, and they have some significant percentage of a tariff on there, and obviously right? You're saying, okay, what is a tariff? What do we even need those for, or whatever? It's a way for the government to raise money in that sense, like in simplicity. So, um, in reality, again, I'm gonna pass it over to Tyler to give his thoughts and to update on his side. But in the sense of like just the tariff in general, right? You have a percentage or whatever that is, as far as like whatever that imported good is, and obviously countries can do the same. So whatever we export to them, they can charge whatever extra, percentage amount on top of that as that goes, and those countries do those same things. Um, Overall, I think a lot of the times when it comes to, why do we have this tariff on this country? Why are we, just tariffs in general? Again, for the government to raise money. While that might impact you at the consumer level, for them, if they need dollars for government spending or whatever that looks like, that just makes the most sense. So, but yeah, I'll pass it over to you, Tyler.
Yeah, for me personally, it's been interesting to see how this plays out. You and I have talked about this in a previous podcast that,
Hmm.
one thing that I don't think we realize in the United States is our goods are taxed, not
Hmm.
taxed, but they're tariffed quite a bit overseas. So it is interesting learning about that, learning about the politics behind it as well, and learning about, there's just certain people that do and do not like the current administration. Um, from there, but China and Trump just went back and forth recently over in the past week about precious metals, and that's in everything from our phones to cars to really anything, just metals in general. So um, it's kind of hard because the market really overreacted last week,
Hmm.
and I shouldn't say that, but it reacted pretty harshly.
Hmm.
And it's funny because the current administration came out and made the statements after the market closed, which is really interesting.
Hmm.
And they made another statement before the market opened the following start of the week. So, again, very interesting. You can take that for what it's worth. Um, but it is important to know how some of these things work and affect us. We are more a globalized economy,
Hmm.
and you know, certain restrictions, tariff deals, things like that will affect us. And I just encourage everyone to do your research. Don't just take headlines, because
Hmm.
some will say, just like you're mentioning, Mikey, the consumer pays for it in some instances, the businesses pay for it in some instances. So just highly recommend doing your research. And it's a lot. Sometimes it's annoying, but it's really needed in stuff like this, especially with everything being really politicized nowadays,
Hmm.
to really be informed and not just going off what somebody says or reading a one or two sentence situation.
But yeah, emphasis on the end of what Tyler said is to do your own research. Don't take, face value, whatever that says. Even if, somebody that you know tells you something, somebody that you feel like is, worthy of whatever they say, also still do your own research, whether that's your parent or whatever else. It's good to formulate your own opinion on it, to get your own facts on it, whether that aids to the fact of whatever you heard or goes against to whatever you heard. It's better just to be informed in general than to just, take one side just after whatever's been said about it or however you get your financial or economic news. So, again, just as we wrap up on that tariff situation, I think another thing too that plays into that is inflation. Obviously, we've talked about that in previous videos, but again, like I said, tariffs are just very interesting, and they can impact you. Again, I said like at the consumer level, right? That's what I was saying too. Precious metals, the things that go into your phone, it can raise your iPhone price or whatever kind of phone you have, your electronic devices, whatever that looks like, right? You're getting ready to buy a new car and that car is not made in the U.S., right? Even if the car was made in the U.S., most of the times, I think this is like a misconception with people, is that all the parts in any cars you see on the road was not formed here in the U.S., right? They had to get those parts from somewhere else. Obviously, some certain precious metals are not here, so some of those pieces are manufactured somewhere else. Still, if it is a American-made car, you still have pieces of that car that were not made here in the U.S. and can be impacted by tariffs. So you might think, oh, well, I'm just gonna buy something from GM or Ford or something like that, and that's not the case. So again, that would be something an uninformed or ill-informed or whatever the word is person would do as far as a thought process. Please just make sure that you do your own research on those things. Speaking about the stock market and going into our next topic is some of the AI factors and some of the technology boom. Now, obviously, I think a lot of people have heard about one of those bigger ones like Nvidia. I think I saw something about, um, was it Oracle? Who's the guy who, I'm trying to figure out his name, but um, they had
Larry
some,
Ellison, that's the
it,
guy that started.
I think it was, but he had some significant boom too. Like anything involved with AI, whether you're somebody who's like using it, developing it, contracting it, like your company sees like some type of significant lift. And I think that's why a lot of companies are making a push to utilize AI because if you're, a publicly traded company and that news comes out, they're like, okay, they might have some potential. They're trying to develop something, so let's go ahead and speculate that we'll see some potential development that'll, be significant to whatever that company is doing and can raise their bottom line. So um, one thing that we can take a look at, especially when it comes to any type of like stock market boom, is market correction. You may or may not have heard of it if you are involved with like investing in the stock market at an individual level. Maybe you have a stockbroker or whatever that is. But a lot of the times when the market becomes, I guess, inflated in a sense, not in the sense of like inflation, the word or whatever that is, but in the sense of like blowing up a balloon. Essentially, it's got to pop eventually. That's what the market correction kind of, as far as an example, will look like. So essentially, what you'll have is that once the hype of a certain idea, so again, a company developing AI, utilizing AI, contracting AI, whatever they're doing with it, these big tech companies, if they fail to deliver, it's not hyped up to what it is, right? You're launching a product and it's AI related, and let's, for example, say it's supposed to, you know, create some type of video, or it's supposed to be some type of innovative way, right? And it's supposed to, release within the next coming months. Now you come around, it doesn't add up to the hype, or it doesn't get to the hype that's supposed to be. It has bugs or whatever else, right? If you're using a certain technology or any other AI that's also with that, that's where that line's like a domino effect. Anything related to it is going to also see some significant push and also some skepticism in the market. So, whenever you see days like that where you feel like the market is like extremely red, or those big tech, um, also look into like, your ETFs, what they're invested in, because a lot of times people are like, oh, well, I have like a mutual fund or whatever else. Like, if your account is heavily tech based, maybe you might want to, diversify that so that it's not all just impacted by once, because those tech companies all seem to be in unison sometimes when it comes to some of those market corrections that come out. But those are just my thoughts on that. What about you, Tyler?
Yeah, I would say it's, like when Mikey's mentioning larger tech, uh, what is it, sector, lack of better words, like a bunch of stocks
Hmm.
together, just knows this is a theory, but some people would say most of the time tech stocks are more risky.
Hmm.
So just figure out where your risk level is. Um, and yeah, it's really interesting. There's been a bunch of memes lately of like uh, everyone's essentially benefiting off each other between like OpenAI and NVIDIA and um, what is it, Larry Ellison's company, Oracle, and
Hmm.
so it's just really it's interesting. I don't know too much about it, so I'm not going to say anything.
Hmm.
But just do your research and figure out. There's some really well-known wealthy individuals that are always say, oh, the next bust is here, the next bust is here, and they've been saying that for like 5, 10 years now. So not really sure. Um, Nothing to say on that point, but there's always gonna be people that think something's going to keep running up. There's always going to be people that think something's going to pop. Just figure out when is enough enough. Mike and I were just talking about this personally last night. When is enough money in your bank account
Hmm.
and your stock portfolio, your investments enough for you? Um, and this is going to be different. Everyone's on their own financial journey, so this is going to look different for everybody. Maybe if you can live off of $50,000 a year, that's great. If there's a family and they need to live off of more than that a year, like again,
Hmm.
it's very individualistic. That comes with stocks as well, especially with technology stocks and investing in those.
Hmm.
Um, just a reminder, ETFs normally track they're a group of stocks that track things or other commodities. So that's what we recommend
Hmm.
if we recommend anything. But they're mostly seen to be less risky, and so just keep in mind with that. And you can go on these ETFs and you can look back on their history, how they've done the past 10 years,
Hmm.
20 years, 30 years. Some of them have been around even more than that. So it's important to know that. Also, the fees associated with ETFs. The companies that run these ETFs, they take fees. So just know that when you're in your 401k or your IRA,
Hmm.
there's money, your money is going towards these. So just keep that in mind as well.
No, those are good points. Yeah, essentially, when you're looking at these, and to at his first point too, these tech companies are like in a loop, essentially, right? They're just funding each other in this huge circle, with people getting bites and pieces out of it. And who knows, as far as like AI's development, what you can do. Obviously, there's going to be an extent to it, and depending on what its use is, our everyday use of it, right? For people who are using it to write an email, an essay, find the best places to eat in town, yada yada. Like, who knows, right? And insignificant at the individual level, but at those higher levels where they're using it to, maybe replace a whole workforce, is where it's most important, right? How do you develop? How do you train? Those are the most important things. I think what happened is that you yourself, when you use AI, are also training the AI, right? However you prompted, however however you corrected, however that looks, trains the AI on its own. So they don't have to hire anybody to do that. That's for free. Well, it comes to a cost to them because every single time. you use it. Obviously, there's significant resources that go into it, but that's also another point that we won't get into. Obviously, that's not anything financial or economic related in that sense. But there has been a lot of gripe around those things and AI's usage and whatnot. So, um, to summarize, and essentially what we're looking at as far as like just AI in the stock market in general, right? Whenever there's some significant pushes in certain aspects, right? Whether it was the tariffs, whether it be about AI, right? Oracle, I don't even I don't even think they were developing anything. I just think they just assigned some contract that had to deal with some AI initiatives that caused a significant boost that they had. But it's things like that, right? That you have to take a look at and you're like, and you can't time the market. I don't care whatever anybody says, you're never going to be able to time the market. Anybody that tells you, oh, it's going to do this or whatever is going to do that, it's, that's hearsay. You can listen to those people, you can, follow them word for word, and, maybe it might be luck that they might be right. And yeah, it's really a gamble, right? Any person that you know that gambles, they're not going to be 100% winning every single time. And if they are, they just are the luckiest person in the world, I guess. But you're really not gonna find anybody that's gonna be like, oh yeah, I can time the market just right to where I know, unless, right, which we've seen this, if you're a Congress member, but if you have some insider knowledge, maybe. But in this case, as a regular consumer or a person that's as an individual trading on the stock market, then that's just something that you're going to rarely be able to do. Significant research and maybe like planning. I know a lot of people that, invest or day trade or, they go off of different factors and things like that, the volume that day or, significant news that's coming out. It all make impacts, but again, like I always say, is that you're not going to be able to time it. Some of those their research points you can do, you're like, I don't know why it's down or I don't know why it's up, and it could be things that are just you didn't even know were significant. Like I said, things that factor into that ticker itself, that company itself, that maybe you didn't know another company had its hands in. Again, a lot of those companies are involved with each other, whether that be through contracts or whatever else. So you can never necessarily say like, everything that I have in front of me is going to tell me how to make my next move within the stock market. So investing is extremely important. Obviously, it's important to grow your money to a point where you feel like you're satisfied, you've reached the financial goals you are at, and everything else that gets involved with that. But it's also it's another tool just to use, and obviously with tools, there's always other tools that you can also use. So high yield savings accounts, um, bonds. I mean, if people get into that at that level, but there's so many other ways that you can invest. Obviously, property and everything else if you have the funds and or knowledge around that. But most importantly, though, like I said, as far as like if you want to get involved with that, there's a certain things like ETFs and things that you can get involved with. And if you check their history, have significant returns, they probably work with the model that you're looking for. Whether you're looking for dividends, whether you're looking for just significant growth, I'm sure there's something that's out there for you that you can follow. That whether it's high or low risk, whatever you're looking for, you'll be able to find that. Talk with an individual that does that. Your broker, make sure you do a heavy research into it if you're doing it at an individual level. But it's extremely important to know these things, to stay ahead of the game in that sense, whether you're not investing or not, right? It's important to know these things. It's just simple factors that can play into how you go about day to day. So those are just some end pieces for me. Anything from you, Tyler, before we wrap up?
I think you covered it. Yeah, just do your research and have fun investing. And don't forget, a lot of this stuff is available for free on YouTube, Twitter, a Google search. So um, I encourage you to go there. And feel free to comment. Let us know if you have any questions. We'd be happy to help you out any way we can.
Yeah, for sure. And again, just to reiterate that, leave a comment. Let us know what your thoughts and opinions are on the recent tariff news, and just as it develops, obviously, it's never going to be an end conversation. So just keep up to date with that, and then let us know what you think about the stock market in general. It doesn't have to be about these tech stocks or just AI in general, but just like whatever you feel like is some of the best practices, things that you've learned. But yeah, like, comment, and subscribe on this video. And we'll be back with you next week on some more financial and economic news and topics. So we appreciate you guys. Thanks for tuning in, and we'll catch you next week. See you.